Hi, I'm Larry Shover, Chief Investment Officer to Solutions Funds Group. This is our monthly video for the Futures Strategy Fund. Joined with me today is good friend and former colleague Marat Molyboga, who is the Co-Chief Risk Officer for Efficient Capital Management, also the Director of Research for Efficient Capital Management. As many of you know, our allocation is to efficient capital management in the 40X structure. So today we want to talk about research and risk. Given the fact that Marat has over 10 years experience, he's probably forgotten more about risk and research than most of us have ever learned. So Marat, if you don't mind, I want to start this whole thing off with leverage, that word that people get scared of. I mean, keep in mind that the world at large, the investor at large, doesn't really understand futures and commodities. I mean, it's a complicated subject. They hear these words about leverage. Can you just explain to me, so somebody that's maybe potentially wants to allocate to a 40 Act fund, what is leverage?
When most clients think about leverage, they think about some type of borrowing that's involved in order to increase exposure. And when we talk about hedge fund industry at large, that is absolutely true. However, when you think about CTA space or managed futures, there's a very significant difference because there's no borrowing involved at all. For example, when a CTA chooses to buy a futures contract, the exchange requires that a CTA deposits a relatively small amount of money called margin to have access to the returns of that futures contract.
Sure. That's interesting because most people think of leverage, think they are borrowing, and it seems like in the futures markets, people aren't borrowing. They're just putting margin money up to maybe accommodate a certain amount of risk profile in a futures contract. So with that in mind, let's move ahead to like CTAs. In your opinion, there's so many CTAs in the universe, and for the people watching this video, that's a commodity trading advisor, somebody that's registered by the NFA to buy and sell commodities, futures contracts on your behalf. In a 40X structure, have you seen like a CTA or a CTA grouping that might be more risky or less risky than the other? Like what should an investor be looking at?
Right. Well, I cannot tell you about our portfolio because we tend to stay away from those risky strategies. But if you think about the CTA space at large, there are a couple of types of strategies that are considered to be more risky. One example would be those CTAs who tend to benefit from carry trade, or another type would be the type of CTAs who tend to collect option premium. In a 40X structure, you would probably have a due diligence team who would go and talk to those CTAs to identify that potential blow-up potential. But also, in the 40X structure, you'd probably have some type of active risk management system that looks at underlying exposure of those CTAs and says that, hey, there's an embedded risk involved that's above what our investors would be comfortable with, and let's take some action.
Great, thank you. And lastly, we all know that there's probably over 30 SEC-approved managed futures mutual funds out there. And in previous videos, we've kind of dissected what that looks like. Like some of them are multi-managers, some are single managers, some are rebalancing portfolios. The way the Future Strategy Fund at SFG, we allocate to efficient capital. We're an investor to efficient capital, and you are a multi-manager which has managed accounts with each and every manager that you're allocating to. Can you describe that a little bit? Like, is that better for the investor, or maybe better yet, why is that better or worse for the investor than maybe just going with a single manager with a single strategy?
Right. Well, I mean, there's a clear benefit of diversification when you talk about multi-manager portfolio, but from the perspective of a risk manager, our job is to know what kind of risks are out there. We need to be prepared for unexpected. So when we talk about investing in multiple CTAs, the complexity of being able to do that grows exponentially, and you have to have a system in place that is able to really look to really understand the underlying risks of those managers and to do that very effectively. Okay, sorry.
Yeah, no, sure. But Marat, just in closing, there's something I just need to ask you because I think a lot of investors think about this. A lot of times people confuse alpha and beta. They think that beta can be replicated. So when I tell people that this is a multi-managed program, it's like, well, why do you have all these managers? Because can't you just replicate like what managers do with like maybe one or two? It would make things a lot cheaper. Would you say yes or no to that? I mean, can alpha be replicated?
I think it's one of the most controversial topics in our industry. And the answer is, in my personal opinion, I think there are certain types of strategies that can potentially be replicated. Like, for example, when people think about managed futures at large, they primarily think about one type of strategies that's called long-term trend followers. And that type of strategy has been in the industry for a long time. And I would say that maybe some of that type of strategies could be replicated. But when you look at the universe of CTAs at large, there's so many unique strategies that benefit from multiple inefficiencies that are really well known, and it's practically impossible to replicate those.
Sure.
So to answer your question, some replication is possible, but there are limitations to that.
Sure. Well, thank you, Marat. I mean, this has been really helpful, and I think this is going to be something that we need to continue at some point because there are a lot of misconceptions in the industry, and the fact is we at Solutions Funds Group are deeply committed to providing that exposure to you, but at the end of the day, I would just prefer the investor to get some type of managed futures exposure. I'm Larry Shover, Chief Investment Officer to Solutions Funds Group, joined with Marat Molyboga of Efficient Capital Management. We thank you for June 27th, 2012 commentary.